We got speed. All right, you ready?
Born ready. Stop asking, man.
Stop asking, man. All right, welcome to Broker to Broker, sponsored by AIM, Association of Independent Mortgage Experts. I am JP Hussey of the Hussey Team Mortgage Advisors. Today we have Josh Lewis of BuyWise Mortgage. What's up, man?
We're just happy to be here in Philadelphia. I get to wear a sweater in California.
I like it,
we
man.
might have one day a year where we can break this up.
Huntington Beach, right?
Huntington Beach.
Yeah, I just spoke with your partner, also at BuyWise, right? You and Scott Chang.
Yep.
Had a great convo with him. We're going to dive deep because you guys have two different types of qualities about you, like very different, and it's perfect. And that's what I want to learn more about.
Yeah.
For my own I'm selfish. I want to learn more about that. But to start, I want to dive into. We spoke a lot before this, but let's start when you got into the mortgage world. I want to know the date, the time. No, at least the year.
No, pretty much like everyone else. I don't think anyone goes to college or gets out of high school and is like, I want to go into the mortgage
Well, you got to be a little bit of a lunatic to be in this.
You got to be a lot of a lunatic.
Yeah.
So something weird always happens. So I went to Eastern Washington University. I played basketball. Plan was to go overseas and play. Wasn't good enough to play in the NBA, but plan was
That's
go
cool.
overseas, have some fun, play for a few years. And I partially ruptured my patellar tendon like 2 weeks after the season got over. And it's a weird injury that you don't have a surgery. It's a big tendon. You wait for it to recover.
That the knee?
Yeah.
Patella, right at the top. Yeah.
Yeah, but it's the big one right below your kneecap.
Okay.
And it just recovers. Unless you fully tear it, it just recovers on its own. And you go back in every 3 months and they look and they go, nope. So for about 9 months, I'm sitting on the couch at my dad's, not working, just doing the best I can.
Is this in California? Is that where you're from?
Yeah,
Okay.
in Huntington. So in 1995, I graduated.
All right.
I probably look to be 22, 23 maybe, but I am a little older than that.
Okay.
Graduated
Fair enough.
Graduated in 95. And after about 9 months, my dad says, this isn't working so good for me. You probably need to get a job. So my grandpa was a realtor. And one of my cousins was a processor. My mom had been a processor her whole life. She then went on to be an originator as well. So they're like, hey, I can get you a job. They had a call center. And it turned out it was like boiler room call center. So yeah, like they would have hired anyone. If you had a pulse, you did. But so I did 2 weeks in the call center on a predictive dialer, calling people that had no interest in talking to us. It was a great place to start. It's not a great place to work, but a great place to start and learn what you're doing.
Sure.
After about 2 weeks, I got promoted and I was now a loan officer. So spent about 2-3 months inside sales, selling those subprime. We're basically doing subprime off the predictive dialer, doing that stuff. And I'm like, this is not fun. You know, the type of people that we're helping need better help than what we're doing. So a good friend of mine in high school, her dad was vice president of a local mortgage bank, so direct lender, one of the evil ones. And he said, come over, we'll hire you and we'll teach you how to do it the right way. So that was sort of the start of it. And from there, here we are 24 years later.
Yeah. So you started at a direct lender or the second spot, you know?
Yeah, it's really where I started. We were 3-4 months at the other place.
Yeah, we were talking before we walked in here, we were talking about how much work you have to put in to become a loan officer. You have to put in the heart. You have to read the guidelines. Like you said, you had the wall of guidelines you go to. You'd find like you were saying, that one loan, you found a specific loan just from reading, right?
So yeah, it was a bookshelf, giant bookshelf full of 3-ring binders, every investor, every program. So people don't realize how easy we have it today. If you're just getting in the business, yes, there's a lot to know, but it's a Google search away in a PDF, searchable. If you're looking for a guideline, we used to have to go to giant, like 3.5-inch 3-ring binders that you would sit there and thumb through it until you found it. And that was what we did with it, with that program. It was, conventional loans at that time, 36 was your max DTI unless you're going on some type of portfolio program. And we found one, PHH, one of our investors, would do a 40-40, no front end ratio, just a 40% ratio. And we killed it for 6 or 8 months.
So you heard it here first. You got it good nowadays.
Absolutely.
Than what it was.
Absolutely. Every time I want to complain about the bad changes to the business, I look at the good changes and go, I don't know that I would ever want to go back to doing it that way. One of the things we were talking about was the types of FHA loans that I was doing in 96, 97, where we had 4, 6 borrowers and difficult manual underwrites where you would have a file when we were done, like your ACOs, but you say an ACO, people go, what in the hell's that? Well, in your folder, these little ACO things would hold your file down. Well, you would have to do it, and then you have to put another one in there to expand it just to cover the giant files that we have. I wouldn't want to go back to that at all. I mean,
I'm one of the lucky ones. I got in 2011. So I wasn't, I don't want to say tainted because it was different, but I got in right when the comp was changed. You can only get paid on one side.
Yeah.
Literally a couple months in 2011, that's when it changed.
Yeah.
So I saw none of that. So I love hearing these stories of how it was so much different than it is today.
Massively different. And so from there in around 2000, so that place, it was a great place to learn, great ownership, all the problems inherent with mortgage banking, but it was a great place to learn. I was telling you, my underwriter was 2 offices over from me, our docs and our funding department. So you would, if you wanted to learn, you could learn. You could sit with them, watch. You have a file I need to get docs out on. They say, sit down, help me. So it's hard on the broker side if you're coming in as a broker to get that, but it's also hard on the direct lending side. Most of these direct lenders are not all that different than what we do on the wholesale side in that they have an origination team here and then they're submitting to an underwriting or ops team somewhere off site. So you don't really have that, but we did. And a great team that was super willing to help us learn. And they decided to go into wholesale, made some really bad decisions, got stuck with some bad loans. So like overnight they were gone.
Whoa.
And
this is like 2000-ish?
98, 99.
This is even well before everything. Okay.
So our original move was, hey, I like being on the banking side. I like having all this. So tons of recruiters, just like now. And they're like, hey, come over here. It's going to be wonderful. So for a year and a half, we went somewhere else. Finally in 2000, late 99, early 2000, we switched over to the broker side.
You've been broker since? Or have you switched back a couple times?
A brief stop in 2013 after some of the guidelines changed, and it looked really bad for us on the broker side. Like,
that was about the time. Yeah, you're right.
You're like, this doesn't make sense. We can't do it this way. And going over to the broker side or the direct lending side, realizing that for us, it was a good company that I worked for, but I'm like, this is no different than brokering. We're sitting here. We've got 10 loan officers in this office, and we've got 3 processors. And once the file's ready to go to underwriting, it gets packaged up and sent to Scottsdale. Like, but it can only go to Scottsdale. I can't go to 10 different lenders. I can only go to Scottsdale with it. So we tried for about 12 months. And I said, you know what? Whatever limitations there are on the broker side, we'll work through it. And the disclosures and all of the changes, the TRID stuff in 2015, it is what it is. We're all working under the same guidelines.
Is there anything going back to, let's say, 98 compared to now? What's that, 30 years?
20. Listen, 20. You're trying to make me old. I'm not 70.
Math is hard. Is there 1 or 2 similarities that you can pick out? Because it's changed so much. But is there 1 or 2 things that are consistent in this industry that's never going to change that you've seen?
That it's still about the client. It's still a confusing and scary process for them. And the person that, and there's many different ways to do this. The person that can make them comfortable and make them feel like they're heard and understood and that they're going to get to the finish line safely will always do well. I mean, we get into a lot of this broker versus banker thing. Well, why are guys successful on the banker side selling rates 0.5%, a full percent higher? It's because they're doing just that. They're good at meeting with clients and making them comfortable that transaction is going to get to the finish line safely. So what people are looking for from that perspective hasn't changed. How they get information, how educated they are, massively different. So it changes how we have that conversation. But that's probably the thing that's still most similar. One of the big changes, and we were kind of talking about this last night, that at that time, realtors controlled, if they closed 10 deals, 8, 9 of those were going to go with whatever lender they said. Now,
it's not like that anymore.
No. I mean, my best realtor that I have, we got 50% of his deals last year. And he tries hard, and he does a good job of selling ethically of why they should work with us. And we got half of them last year. Some do a little bit better depending on if they're dealing with a lot with first-time buyers. I think first-time buyers are more likely to go with their realtor's advice. But it's just, it's really different. They can get so much, borrowers can get information from so many different places. And whether it's a millennial buyer, first-time buyer, move-up buyer, they're all essentially first-time buyers. They may have got a refinance recently, but most people only buy 7, 8, 10 years. Everything's changed enough that they're a first-time buyer the next time. So if you keep that mindset and say, this is all new, all weird, and all scary, and proactively educate a step ahead of them asking the questions, that goes a long ways to getting that 5-star review.
Yeah, so let's go into a bit, because I just spoke with Scott, so I know his side of the business. You guys are partners. You're on a totally different type of side, right? You're more, he calls you the brains.
I prefer to call myself the beauty, but he doesn't like that. So he goes with brains. I think he's trying to say that I'm not attractive.
Fair enough.
But what's the reason why Scott and I started working together is that when the market went sideways, he has a similar background of how he started in doing difficult files. When the market went sideways, he started blogging and writing about problems that people were having with the mortgage market at that time. In my history of doing difficult files, we knew each other. And in 2015, we got together and we're like, I'm trying to do this and he's trying to do this. We're like, this is dumb.
He said he likes chaos.
He does like chaos.
When it comes about, he can see more clear.
So I'll tell anyone that we're like Felix and Oscar.
Okay.
So I don't like chaos. He likes chaos. So the similarity is funny. Scott and I were having this conversation at dinner last night. I said, my wife and I are 50% identical and 50% polar opposites. And that's Scott and I. So it's my work wife. He and I are 50% exactly the same and 50% complete and total opposites. And he does. He likes chaos. He likes just, let's throw this out there and see what happens. But the similarity is I had a background of doing really difficult deals and helping people in tough spots. He's writing about difficulties and problems. So we're like, this is dumb trying to do this apart when we can be better at it together. And we had no idea what that meant in 2015.
So 2015, you guys came together.
Yeah. Okay. So it makes sense when you say it, but we didn't know what that meant. So we had a third partner initially that was supposed to handle all of the broker stuff, accounting, technology, brokering, that stuff, and it just quickly fell apart. So we reverted back to my broker's license, and I took on all of that role. But we were both still originating. He was doing his loans, I'm doing mine, and it's kind of it's under the same umbrella, and we're doing similar types of stuff. And the more we got into it, it's like, this is dumb. I'm better at this stuff, and you're better at that stuff. Just put all the loans over here to me because it's not that big of an additional burden, and now it's freed up all of your time. So he has the time to do all of the marketing stuff. So if we need our database cleaned up, if we need a mailer sent out, anything that we need done, he has all the time in the world to do that. And more recently, the last 2-3 months, it's been high-level stuff. I don't know that we've done a lot marketing-wise, but we're in a couple of coaching programs, but one of them is a marketing coaching program, and that's largely all him. So we'll debrief every morning and kind of go through the stuff, but he's penciling everything out and able to think at a really high level. Unfortunately for me, I'm stuck in the files every day on ground level. And it's hard. You have to do both, and it's hard as one person to do both.
Oh, yeah.
So it's great that he's free to pursue that because I can see the things we're doing. I get my input, but 90% of that is his thought process and going through it. So we get together daily and make sure we're on the same page and moving down the same path.
Yeah. And what I got from him when we were speaking, when he was describing your guys' partnership, you both care so much about the client, like the quality of it. Like you guys go really deep with the client. And so when you're talking about Scott and the marketing side, he's just not cleaning up a database and putting it in a CRM. He's he's niche-y, and you are too. And you're finding specific ways to market, and that takes time.
Yeah.
Right. And then you're getting the right clients in.
So the biggest thing, Scott started with down payment assistance programs.
Right.
And in California, we had a big budget problem during the recession. 2010, 2011, they balanced the budget in California. And one of the ways they did that is we used to have city-level redevelopment agencies. Well, they shut all those down and took the money that all of those agencies had back to the state level. So we used to have hundreds of programs throughout the state. Now we essentially have one state-run program. There's a couple of others, but mainly one state-run program. So Scott wrote all this content about all these neat little programs that he was an expert in, and now they're all gone.
They all went away, yeah.
So from there, he transitioned and started as we had more boomerang buyers coming back into the market, became an expert on the guidelines for buying again after bankruptcy, foreclosure, deed in lieu, short sale, all that stuff. So we did a lot of that. And even in 2015, 2016, we were still doing a lot of that. In 2016, right after he and I first started working together, the thing that came up, I was seeing loan after loan with the student loans coming across. I'm like, how in the hell does someone owe $380,000 and their payment's $112 a month? So then you start digging in and go, income-based repayment, income-driven repayment, what in the world is this? Had never heard of it. So he and I both dove in, said, let's research everything and figure out what the guidelines are, what you can do, what you can't do. And in that time, so from 2016 to 2019 now, they've all changed and changed back multiple times. But the thing is, if you do any of the SEO tools on Google searches now, the third or fourth highest search related to mortgage is mortgages with student loans. It's a massive, massive issue. So that's what we're always looking for. What are we seeing? What's coming across our desk? What are people having problems with? And how do we help and solve that? And even with stuff like student loans, the guidelines are pretty straightforward. If you know how to pick up the 3-inch binder or search a PDF, you know what the guidelines are. We get calls every day from other lenders giving people wrong information, inaccurate information, and people are persistent. That's what we've seen with the website and the internet. People will keep searching until they get the answer. Unfortunately, they can keep going and keep getting the wrong answer and the wrong answer. Loan officers love to say yes, and then they dig into it, and you get you 2 days before closing, and you can't do it. But we're always on the lookout for what is the next thing. What is the next thing?
Yeah, always evolving. Yeah, what Scott was saying too was you guys are using the website that you guys have developed to bring in clients that were turned down by their lenders, right? Is that a big piece of your business right now?
Big piece of it.
That's crazy. A lot of people are just throwing shit against the wall, and you guys are going the complete opposite way and saying, we're going to educate, we're going to figure out guidelines, and we're going to be right.
The two things that have enlightened me more than anything that I never would have known is hooking up with Scott and seeing all of the inquiries off of the website and how much inaccurate information, lazy loan officering, or more so just greedy. If you're the guy that's doing 2 deals a month, one deal is 50% of your production. If you think there might be a deal there, so there's a lot of selfishness from originators saying, hey, I got a 70% chance of getting this thing closed, but if I don't say yes, then it's a 100% chance that it's a 0. They'll bring these deals in knowing they're probably not going to get them closed, but this is people's lives.
Yeah.
Moving trucks, deposits, they're planning on getting into this house. We're coming into the holiday season. They want to have Thanksgiving or Christmas in their new house. And you would be stunned at how many people don't take that into consideration. It's about them as an originator or them as a bank versus these are real people. These are their lives. Yeah. And a lot of that is so many people, they're 90% refinances. If I screw up a refi, how big of a deal is that? Hey, you didn't go from 4 to 3.75. Well, it's not good, but there's no blood on that one. When you screw up someone's purchase, you've got all sorts of potential problems. And we have a lot of that where there's been so much of people that can do whatever marketing, can buy leads and do a volume of refinances.
The back end's not there.
And when those start drying up, then they all decide, well, I want to do purchases too. When you've got 10 refis on your desk, it's easy to say no to a purchase. When that dwindles down, you've got 2 refis on your desk and someone calls about a purchase, you've never done it. These people will go, oh yeah, we can help you with a purchase. And we see a lot of that.
That's insane. I mean, I always say we're very deep, my company, very deep in the local market. So I say, listen, if I screw up, you can come find me. And I use the word, I say, you can come punch me in the face if I screw up.
Yeah.
So I'm making sure we're right.
Yeah.
But like you said, and this isn't everyone, but a lot of non-local, they have no ties. Like it's someone 100%. In California doing someone in Pennsylvania. And if they screw up the purchase, what are you going to fly to California and can find this guy? They don't care. They don't have that. They have no skin in the game. Right?
Even within the state of California, I mean, Anthony has the numbers, but it's like, 25% of loan volume nationwide is done in California?
Yeah.
So it's a giant state. You're far away from, there's large loan amounts, a lot of money to be made. So you have more people setting up operations that are about making money. I mean, we all do this for a living to make money. But it can't be about making money. And so many of the refinance shops, there's nothing wrong with setting up a refinance shop. Some of them will do, we were talking to do them on very thin margins. You can get a great loan in terms of the deal from them. But it's like you said, when it's just an internet lead that you've purchased or a call into a call center, there's not that. I mean, we have so much population-wise in California that you could burn 20 people next month and you have still an infinite number of borrowers that you can help the next month. A lot of AIM members in different parts of the country, if you're in North Idaho and helping people in a 50-mile radius, you screw something up, everyone's going to know. So there's in some of the smaller markets, there's way more accountability because you can't keep burning people over and over again. There's bad actors in every industry and in every city, but the business can sort of self-police it that way. If you're in a small market and there's only 200 resales every year and 4 realtors do all those transactions and you screwed up 2 deals in a year, They're going to, no, we're not doing the loan with this guy.
And we're dealing with people's lives, like you said. People buying a house for their family. What, a week or two before closing, you're saying we screwed up on this student loan type calculation, and sorry.
You have
unbelievable.
You have no idea. Like, if we really
you take a lot of those people.
If we went back to the archives, I have some truly horrific ones. The one right now is a refi, and again, no one dies when a refi doesn't close. But this lady, her son, she's on title. Son was the borrower, and the son has a bunch of student loans. The refi was supposed to close a month ago. And she calls, and Scott talks to her and then hands her over to me. And I talk to her and like, well, this is pretty simple. We don't need your son. We don't have continuity of obligation anymore. We're just doing a rate and term refi. There's no continuity of obligation requirement. Take him off. You qualify on your own. She goes, okay. And her answer was, I'm going to go back, talk to the other lender, and see if they can do that for me. So she calls back, appreciate your help with what you told us. He says he can do it too. Somehow the guy still butchers it. And the funny part, so we were telling you, my wife is a wholesale account executive for Finance of America. The loan officer they were working with was a Finance of America retail loan officer.
Of course. All right.
So we look at it, and it just happens that Finance of America has our best pricing that day. We have a Finance of America appraisal in there. So we call and say, are we able to transfer this? They're like, you get the letter from the borrower. They don't want to work with retail. They want to work with wholesale. We'll transfer it. And it was that easy. So again, there's a refi, but they were supposed to close a month ago. If that had been a purchase, it would have been the same result. They were supposed to close a month ago. So you either lose the house or you have 2, 3, 4 weeks of high stress of, can I extend my apartment? Is the seller going to give me an extension? Do I have per diems? All sorts of fun stuff in there. And it's just, it's never ending. It's never ending. We get multiple calls every week that other lenders have just butchered files.
I was curious once I heard Scott talk about that, and that's a main focus. That really goes back to you guys really do genuinely care about the client. You're taking down what other people have screwed up and trying to fix them.
Yeah.
And that's a big part of your business.
Yeah.
That's pretty cool. It's pretty cool.
And the thing is, it is extra work, that front end, but we look at it, it's an assembly line. Once you get the problem solved and you identify it and know what it is. So I always tell everyone my job when I'm having my first conversation with a client, say, this is what we're going to do. You may think it's a little bit invasive or we're asking a lot of questions. Well, my job is to identify everything that can be a problem and clear it before we ever go any further. So an underwriter's not asking questions that you and I haven't thought through. And that's a lot from dealing with stuff on the website. So we're going to have that conversation. Most times they've already identified the problem. It's a student loan problem. I had a foreclosure or a bankruptcy where I had a lien discharged. The other loan officer didn't see it on the credit report because they stopped reporting, and then they don't know what to deal with when it pops up. So it's just identifying those issues, because once you have it all identified and determined that they do qualify, a loan's a loan is a loan. It's that front end. And no one wants to take the time on the front end and look at the details and really, whether they're afraid to have an in-depth conversation or ask the tough questions of a borrower, or, they're inundated day after day with rocket loans, push button, get mortgage.
Right.
We all know it's bullshit, but it's still what they see. So you're kind of having to fight back against that and say, really, it's push button, get redirected to the call center, and them say yes, and then send it on to someone that will determine if yes means yes. That's what we're really looking at with that, and we're fighting against that. And once you educate them and say, hey, we got to this point because we wanted the easy button. We're going to take 20, 30 minutes. We're going to identify all the issues, make sure we're all on the same page, and then it's easy from here.
Are you starting to see the consumer respect this more than you have seen in the past in terms of you taking the time up front and not driven totally by rate and price? I feel like it's starting to get there.
I feel like it's specific to the consumer and then also the referral source, depending on who they were referred from. If it's a referral from someone in your database that you've done 3 loans with, they're going to give you a lot more weight. If it's someone that came from the website that got the yes in 2 minutes on the phone and sent over all their information, they're absolutely going to listen. They'll spend 2 hours with you on the phone. But we do, there's just a volume of the public that's been inundated with this message that it is just that easy that, well, why are you talking to me? And the funny thing is, it's rarely the guy with the 800 credit score and the 200,000 W-2 income. It's the super marginal borrower that he's like, no, this is easy. I saw it on the TV. The guy that's incredibly well qualified, he's like, oh, I get it. Here's all my stuff.
Yeah, right. Can you take us through, once a lead, I kind of want to dive deep on how you do business, your day-to-day. So you get the lead. It goes to you or one of your loan officers, right, that you have. You have two?
Two,
right? So it comes into you. where do you go from there? Online application, verbally? Do you meet them? What's your practice right now, and how's it go through the loan process?
If it's me, 99% of the time, it's an online application.
Okay.
For either one of them, you and I were discussing a little bit the difficulties of having a team. Those are my deals, even if it's going through them. But there's a few different ways that they can get to them. If it comes from the website and it goes to Russ or Christy, they don't know who Josh is. They don't know who Scott is. They know the website said they can solve my problem. I had a brief conversation, or I just made an online inquiry. So those I don't touch. But what I've always told them is, if you can get them to do the application while you're on the phone, do the application while you're on the phone. Get them to commit to that and spend a little bit of time with you. You're going to get to know them. And then that way we can send an accurate needs list out through Flowify, get back only what we need. Otherwise, you're probably asking for more than what you need, and it's going to be less likely that you're going to get it back. So
that's the flow, right? Online app, or if you got them on the phone, let's take it right now.
Yep.
Next step is the needs list, right?
Yep.
If you're using Flowify, which is a great system.
Yep.
So you're getting that out, right? If it's let's talk about a pre-qualification. You doing any type of game planning with them? How's that work on that side?
So if you're looking to buy a house and you call in, I think it's important. They always have questions. It's very rare that the person says, "Nope, I just want to get approved. Tell me where to send the information." There are some of those. They're like, "No, Jeb just told me to call you, and if you say this is the next step, I'll do it." But most times they have. So whether I want to take those calls whenever possible, but I'm in Philadelphia right now. I can't take those calls. So if that call goes to Russ or Christy today, we've gone through a process of saying, ask them what questions, before we get started, I'm going to ask you a few questions, but before we get started, what questions do you have about the process? What concerns do you have? Is there anything specific about your situation that you think could be problematic for us? And it avoids a lot of these things later on, because most people will tell you they don't want to have problems. So they'll tell you what their issues are. Well, hey, I was off work last year for 3 months. Okay, well, when you say last year, when was it? It was in January. We're almost 2 years past that now, and it's not an issue. Or it could be a big issue, but you're able to identify that. So letting them know right away, I'm here to listen. I want to know what your situation is. Because if we just jump in, the guy that does want to build rapport and have a conversation or has some questions or concerns, if you just say, hey, I need you to go online and fill out this application, which I know other loan officers are having success with that. If it works for you, fantastic. But some people, if they don't feel like they've been heard, they're going to move on to the next person.
Of course.
So it's rarely a long conversation. It's usually 7 to 10 minutes, and they'll tell us what their thoughts are, what their issue is, and I can ask them some quick questions. Do you work for yourself? Do you work for someone else? Is anyone else going to be on title with you? So you know how many borrowers. Are they self-employed? Are they W-2? Do they have bonuses, commissions? So in my brain, I'm just building out my needs list of what we need, but I'm also letting them be heard and identify any potential issues that we could have. Yeah. And they said, hey, I had a bankruptcy 5 years ago. Well, cool. We're going to need those bankruptcy docs. It's really for our benefit, but it's for their benefit at the same time, because they feel like they're being heard, and they feel like that's the way the process is going to go. We're not getting into what loan is best for you, because I don't know.
That was a question.
I haven't seen your credit. You're going to tell me a little bit, how much do you have to put down? Are you shooting for a payment, or is there a specific property? Our average loan amount's $440. Our average purchase price is about $550, $575. So I need to know, is that person looking to buy an $800,000 house or a $400,000 house? And then how much money do they have to work with? 25% of the time they'll say, I just want to know what I can qualify for, or I only feel $2,500 a month is what I can afford. And it gives you your constraints of what they're looking for. Other times, hey, I saw this house at $650. I want to buy it. Well, cool. Now we know what we're shooting for, what the constraints are when they provide the information, and also getting from them, what's your timeline? I mean, we have a house identified. You want to write an offer? Well, cool. Get this stuff into me this afternoon. We'll have a pre-approval letter for you this afternoon. Other people, talking to a guy the other day, says, oh, no, we're not doing anything until January. I just want to know what we can qualify for. I said, well, cool. I'm going to be in Philadelphia. Can we talk on Monday?
Yeah.
Yeah. So it's letting them say what their timeline is and what their expectation is, and then notating it in the system for either myself or the team, so that we all know what that person expects.
It sounds like it's true teamwork, what you're doing.
Yeah.
You're not telling them you are. You're being direct because you're the professional, but you're allowing them to talk and let them know what they want during the process. And really, it's teamwork. Yeah. And that's what's great about the broker channel. I'm newer to it, but broker's still a dirty word. Right? And it's like you don't have control. That's what people think. We actually have a lot more control. We have different places we can go to fit the client's specific needs, right?
Yeah.
Yeah, I mean, can you touch on that a bit more? It's
a conversation that we want to have up front. So I always ask people, have you talked to anyone else? 9 times out of 10, the answer is no. I mean, most people go with the first person they talk to.
Sure.
But if they have, well, cool, who did you talk to? Well, I talked to someone at Movement Mortgage, or I talked to someone at Fairway, or I talked to someone at Wells Fargo. Those are different conversations. It's a different response that you're going to have depending on who they've talked to. If it's a veteran and they've talked to Fairway, we know what direction we're going with that conversation. But you've now said, well, let me tell you how we're different than those places. They're a retail lender. They have a couple of investors. They have one rate sheet, and they have one set of underwriters. If those terms don't work, or at any point we hit a dead end, you're done. I have 15 lenders that we work with regularly, but in Loan Sifter, I've got, I don't know what the number is, 175, 200 different lenders in there.
It's insane.
I'm looking at the pricing of all of them. There's really only 15 or 20 that I work with, but if one is consistently better than my core, we're going to add them into the mix. Unless it's Quicken.
Right.
So we'll go through that and explain to them that it's not always the absolute best price lender, because a lot of times the difference between the best price and the third price lender, even with our big loan amounts, is $300-400.
It's not much.
Do we want to go to the toughest underwriting, slowest system for $300, or do we want the best underwriting, fastest system? And that's what we do. That's what my job is. I had a conversation with a realtor this last week, and hopefully we're going to be doing a lot of business together. She closed 20 sides last year, 20 buy-sides, and she's explaining to me who she's working with right now. She had a loan officer from Fairway, then in-house with Finance of America, and she had another guy that she didn't even remember where he worked with. But she explained what she liked about each one. One had a very detailed system, but it could take 4 or 5 days for her clients to get an appointment. One was usually available. Their terms were okay, better than the other. And then the other, this guy was like a one-man gang. He did everything himself. But when we're done with that conversation, what I said to her, I said, it sounds an awful lot like you're the mortgage broker. So you have 3 lenders to choose from. You have to qualify your borrower up front and go, which one of these 3 are they best with? So the good news is I got 15 of them that we're going to do that all day, every day. Is this someone that needs the best terms? Is this someone that's super sketchy and we need the loosest underwriting? Is this someone that it has to close in a certain timeline? We all know that if you need a deal closed in 8 or 9 days, that's probably a UWM file. You're not going anywhere else with it. No one else, a handful. We've got one through recently that quickly with Caliber, but it's just a handful that can close them in that timeline. So those are the things we're looking at. Is it lowest cost, lowest rate, biggest lender credit? So that's the conversation that we're having. And hopefully by the time we're having that conversation with the borrower, we've seen enough of the file that we've identified what their hot button is.
You already know. Yeah. You have an idea.
We do, because Scott wrote so much about down payment assistance in California, we get a lot of people that have very little money. When we explain to them, hey, we can cover all of your closing costs and all of your prepaids with a lender credit. Can you come up with 3.5% down? Most of the time it's yes. So then for them, it's like, I don't care who has the lowest rate. I care who has the best rate with a 2.5-point lender credit for you. So yeah, we're getting into that's the benefit of a broker, because most retail lenders don't want to give out big rebates. So it doesn't even exist on their rate sheet. And we get a lot of people that are like, they call us for down payment assistance because they were qualified with a high cost direct lender. And they're like, oh, I don't need a loan. I'm already approved. But they told me to call you guys. Because the funny thing is, our website, we have a BuyWise website, but our website is not branded to BuyWise. There are other lenders.
What is that website again?
Findmywayhome.com.
Findmywayhome.com. Okay.
There are other lenders that see it because Scott's written so much about down payment assistance. They don't bother to look and see who it is and who's behind it. It's pretty easy to figure out who Scott Shang is, or if I wrote the article, who Josh is. They should know we're lenders. But we get a lot of calls from people saying, yeah, my lender said to call. I said, okay, well, what have they quoted you? Well, I've got an FHA at 4.25. I said, well, I got good news for you. You don't need down payment assistance. At 4.25, I'm giving you $8,000 towards your closing costs. And they're not even aware. No one's educated them.
Yeah, it's tough. It's tough. And that's what I've seen from speaking to Scott and you. You're throwing out so much free information. You're trying to educate all up front. And then hopefully you do get the lead. If not, it's okay. You know, you're giving it out to the universe and hoping it comes back. It's karma.
And for the most part, it does. And
right.
You know, you and I were talking, it is great that Scott can focus on marketing because so much of that is about deal flow. Just like the guy that knows, hey, this is a 70% chance deal, but has to tell everyone it's going to be great and hope for the best. If you don't have enough deals, you're holding on to every lead and every client so much. There's just times when for your sanity, you need to go, we're not the best fit. And when you can do that and know you have enough deals, now you can go deep and spend that much more time, effort, and energy on the
That's
people.
a really good point. When you're not focused on every lead because you need to make that money, you're just a different person.
Yeah.
You know, you can sell more freely and be okay with it. And trust me, people can smell it when you're pushing on them. They can smell the, I don't know if it's not fear, but it's something there, and they can feel it, you know?
Yeah.
Now, if we switch a little bit, I want to get into, you guys are very consumer direct friendly because of what you guys have built on the front end.
Yep.
But you guys are going back and making sure you are building relationships with real estate agents like you were speaking about.
Absolutely.
Could you, because since that's more of your role, could you talk about how you're not mining for them, but how you're getting, are you doing coffee appointments? What are you doing there? And what's your pitch to them to work with you?
Yeah. So we have, in our coaching program, a qualified target realtor is closing 8 buy-sides a year.
Okay.
Now, we're in a market in California, just like we were talking, there's a lot of loan officers. You can do 2 deals a month in California as a broker working out of your house and make a decent living. There's a lot of realtors that can sell 3 or 4 houses a year. You get $20,000 commission, you're an $80,000-$100,000 income.
That's like we kind of talked about, that's a job.
It's a job.
And you guys are building a career.
Yeah.
I just want to touch on that because I know we spoke about that.
No, absolutely. If you're one of those loan officers, I get it. I get in our market that you can do that, but it is a job. And when you're doing that little volume, it is very subject to the whims of the market. When there's a bunch of refis, you're going to have a great year. You're going to do 35 deals. And when they go away and you don't have any real estate relationships, you do 5 or 7. It's not a fun existence. I would rather build that business, and it sort of insulates you from the ups and downs. In that, if I have a 10% downturn and I'm doing 200 deals, that's not nearly as bad as a 10% downturn when I'm doing 20 deals. So that's,
And you get it. You've been doing this 20 years.
Yep.
You obviously think long term.
Yep.
You're not thinking just as short term.
Absolutely.
You have to.
And the realtor partners are really important. So kind of going back to California, you have to lower that threshold because there are very good agents that only do 5 buy-sides in a year. Because most of them, their preference is they'd rather do listings. So let's say they do 7 listings and 5 buy-sides in a year. What does that really mean for me? If they're good and they can get 60% of those our way, that's 3 deals. You need to have a lot of those people. So we do start with production numbers. We would never eliminate someone because a production number just tells me how much effort I'm willing to make to get in front of you. It doesn't tell me that if you're under that threshold, I don't want to work with you. We have some great realtors that send us 1 or 2 deals a year. When I say great, they do a great job for their clients and they're super easy for us to work with. In a perfect world, I'd probably rather have 100 of those. You know what I'm saying? Then prefer that to 10 top producers that are super high maintenance, have someone in their face all day, every day saying, you're the greatest. I want to pay for your Zillow ads. I want to do this, that, and the other. They're getting unrealistic promises. It's like the pretty girl before prom. They get a lot of attention. And not that that's a bad thing. They've earned it. It's hard to get to the top of the heap in mortgages. It's hard to get to the top of the heap in real estate.
A lot of people in the industry, like there's a love-hate with real estate agents. But that was a good point. They've earned people coming to them, offering them things, I guess, right?
There is an agent that her office is a half mile from us. I would not work with her if you paid me to do it. But at the same time, I respect what she does. She's one of the top 100 realtors in the country. Very high purchase price, very high volume, very high satisfaction for her clients. Personally, she and I are not a mix to be working together, but her clients give her 5-star reviews. They get great service. She makes a ton of money. I don't think she's hurt by the fact that I don't want to work with her. We're not all the same. There's different people and different business models.
Great point.
And so that when you say, I've got a list right now in my office of people in Southern California, there's so many zip codes that we just look and go area codes. So 2 area codes that are within 20 minutes either way for us. I've got 120 agents on that list that do more than 12 buyer sides a year and are not so high. Like for us on the broker side, we're just like everyone else. If you have $1.5 million purchase, Wells Fargo or Chase is probably going to get in front of them and steal that deal.
Sure. So
it's not that I don't want to talk to them. I'm just not going to target those agents. And we have a lot of those agents, especially top producers, where we're at in Huntington Beach. So agents that have done 12 or more buy-sides in the last 12 months and are in our price range.
Okay, so that's where you're starting. You look at production numbers, right? Zip code. Those are some of the
we,
things
we
you
go
start
we go
with.
area code just because there's so many
area code.
zip
I'm
codes.
sorry.
But
Okay,
there's no wrong answer. You know, Carl White, our coach, says
Yeah.
when he got into the business, the way he was taught is you get out the map and you put a little pin where your office is, and you set a cup over it, and then you draw a little radius around it, and that's who you should go after. And then he kind of saturated that and got as much business as he had, and he's like, I don't know what we're going to do, how we're going to get more business. And then he got another mentor that said, well, you get a bigger cup. And now you just draw a bigger radius.
A bowl, maybe.
So like for right now, with us wanting to expand our realtor businesses next year, I don't need a big cup because there's a lot of realtors in Southern California. So where you're at, get as big a cup as you need, draw that radius on there, get that list. And again, that doesn't mean you exclude anyone on that list.
Sure.
Anytime we close a deal, we're marketing both agents. Hopefully it's our agent on the sell side, and on the list side, we're going to call and just say, hey, you're our client too. You want to call my office at any time. These people are here to answer your questions and let you know where we're at. And when we're done, I hope that you would be willing to give us a 5-star review, not just our client, and then we can have a conversation about working together. Now, rarely, if you run the numbers, it's 80-20. 80% of those agents are not going to hit that list. Probably 90% of them are not going to hit that list. Doesn't mean I don't want to work with them.
Sure.
But if we're going to sit here and target over the next few months, I'm going to go to the highest volume.
Got to start somewhere. I'm trying to give everyone an idea of if they have to get back in the game with contacting real estate agents, where to kind of start, you know? So looking at some numbers and doing the circle, right? That's just a good, simple way to start.
Yeah.
Now that you have the list, right now you're going to target them.
Yep.
What are you doing? Are you cold calling them or texting them? What's your go-to here to get them? To at least get an appointment so you can talk.
Think about this. You're a young guy or girl and you're newly single. I know the kids these days, they get on online and do it. But probably the best thing is talk to your friends. Hey, cool. you know anyone that looking for a good young person to date? Well, it's really no different. Do you know anyone looking for a realtor? And the person most likely to be able to make those introductions is a title or escrow officer. They're the ones that have those contacts.
Okay.
If you've built a reputation with them, they will be most likely to make those introductions for you, especially for a title rep. If you think mortgages are commoditized, nothing is more commoditized than title. There's, in 24 years of doing this, I've had one client ever with a title claim. It just doesn't happen. It's insurance for events that never occur. So how do you differentiate yourself? Maybe your underwriter is a little better, maybe your fees are a little lower, but it's insurance. It's published with the insurance commissioner. They're purely commoditized. Yeah. So they're looking for ways, how do I differentiate with potential people? So partner up with a title officer or a title AE, a title rep, and say, let's go out together. Let's go meet. Let's educate. Let's do a lunch and learn together. So there's not one right answer. In Carl White's Freedom Club, we talk about it a lot because that's our coaching. There's 20 different ways to do it, but they're all pretty similar. Get in front of a realtor. Find some realtors you want to target, either because they were great to work with, or they do a lot of business, or they're local to you, or all of the above. Get an introduction to them, talk to them, bring value, ask them for business. That's the hard part, is asking them for business. Most people won't ask for business. They'll do the whole thing. I talk to the listing agent every week. I update them. Everything's good.
But they don't.
But we get
ask
to the end.
question.
I don't say, hey, do you have anyone I can help? And I don't say that, hey, I'm better than everyone else. Before we started coaching, I probably did the same thing. Like, hey, we're great.
Sure.
You didn't realize we're great? You're not asking to send us deals over? If you don't ask them, most people assume if you've done a really good job, they assume, hey, this guy's good. He's got all the business he needs. They need to know, no, I want more business. And that's, talking about Freedom Club and the difference between people that are doing 100 deals a year and 300 deals. It's the systematized process of getting in front of realtors and borrowers that need their services and asking for the business regularly. And it's been a learning process for us. After 24 years in the business, we remind ourselves,
you're always evolving. You've been doing this 20 years, like you said, and you're constantly trying to get better.
Yeah.
It's going to change.
Yeah.
The mortgage industry changes. We're in a different maybe cycle for whatever it is. And what's really cool about you guys is you're always looking to improve and get better.
Yeah.
Like, look, you're getting coached right now. You've been doing this 20 years. Most people are like, I don't need a coach. No, you're trying to figure it out.
Yeah.
That's great.
And it's good to have someone, like, think about this. In this business, we're all self-employed. I mean, you may work under another broker, but they're not sitting there cracking the whip on you.
No.
Unless you're in a call center somewhere, you're not being told what to do. You are self-employed. The accountability of having that person that you know and respect and believe in
As a coach.
and
so you
as a
recommend
coach,
getting some
150%.
Okay.
And you know, the prices are all over the place. I did about 6 or 7 years with Building Champions back in 2000, from 2000 until the meltdown. And it was great. It gave us a foundation and
Core
a basis
values,
for it.
right? Is that what they teach? Okay.
Yep. Yeah. So they want you to start with your life plan before you ever get to business. And Carl starts with something similar, a little different approach, but figure out what you want from life and what you have to give, and then apply that. If the mortgage business is for you, figure out how to apply that to get what you want.
All right, nice. So this takes me to this will roll right in. So work-life balance, or I like to put life first, life-work balance, right? You're married, right?
Yep.
You have kids?
We have no kids.
No kids. So I got 3. Look at me. I'm a psychopath. But how is your wife's in the industry too?
Yep.
How is that working? Is there any tips you can give to people out there in a chaotic?
Don't let your spouse. If you're a woman, don't let your husband get into the business. If you're a man, don't let your wife get into the business.
Fair enough.
And the sole reason is, we already know there's a lot of stress in this business. Don't multiply it, because it doesn't double it. It amplifies it.
Yeah.
Just because, especially from my end, I can control the people we're saying yes to in the business. We're doing more than she can on that side. As a wholesale AE, you're doing business with some people you just don't want to.
Sure.
I mean, the same rules apply. You build your business at a certain point, you tell people to go away, but it's stressful.
That's a tough side of the business, being an account executive. Like you were saying, you give a lot of credit to your wife for doing that, right?
100%. It's been very educational for me, seeing her in the business. She worked for me for a long time and then went into the wholesale side. Seeing the types of questions that she gets on a day-to-day basis, the type of treatment that she gets from people, that you're just like, there's no barriers to entry in mortgage. Now there's a slight barrier. You got to get your license and a little bit there, but you don't have to have a degree. You don't have to have gone to college. We have a lot of people in this business, big egos, big incomes, and not a lot of common sense.
Wow.
It's a people business. It's emotional intelligence. In the moment, I might feel great ripping an AE, but when I need them next week to do me a favor, did I win? No, I put myself to the back of the bus next time. And I say that, I mean, the reality is we fired an AE 6 weeks ago. He actually fired us, but I knew the conversation we were having, we weren't going to be working together.
Right.
It worked out well for us because their sales manager said, no, we want the account, and switch us to an AE that's a much better fit for us. So I'm not saying that I've never got into a debate or an argument with someone, but there's just lines. There's professionalism. You just don't treat people certain ways or say things certain ways. So there's the professionalism aspect that our wholesale AEs are having to deal with that they're not getting from your competitors. And then just the expertise and knowledge, like the questions are just mind-boggling. It's not to say that she doesn't get a lot of good questions. I ask our AEs questions. I don't know everything.
Sure.
Or it's in a gray area and I need to ask 3 AEs, how are you guys going to look at this?
Well, they're a part of the team. They have to be, right?
Absolutely.
And you can't be a dick to them all the time, because that's not going to be good.
Yeah.
I mean, there's times, but yeah, AEs are part of the team. That's what I found in the short time I've been on this side. I'm like, we need a good AE, someone I gel with, just like a realtor partner.
Yeah.
Like, I don't care how much business you're doing. Like, if we're not gelling on this certain level, then what's the point? You have to be there. They're part of the team. It's important.
No,
they're not just someone else.
200%.
Yeah.
And if they're not working for you, figure out, is that company not a fit for you to work with, or is it just an AE fit? Because again, like that realtor I'm talking about, every loan officer in Orange County would love to work with her. She's not a fit for me. Well, maybe your AE is just not a fit for you, and there's 5 others at the company that are a good fit. Don't throw out a good relationship with a good company just because you have a bad AE fit. Sure. And don't be afraid to ask for a different AE. We've had a couple that were just like, I'm sorry, we're operating up here, and your knowledge level is down here.
Fine. Maybe they'll be there sometime.
Maybe they'll be there sometime.
It's different,
but
right?
we are not a good fit for you right now.
Right. All right, so we have about 5 to 10 minutes left.
Perfect.
All right. You both, I mean, it's been great speaking to you and Scott today. You're both so passionate about the quality of what you guys bring to the consumer. I mean, you can feel it, right? Is there a couple, 1 or 2 things you can tell everyone out there of whether they're brand new to the industry, or they're revamping, or they're getting a coach? What can you tell them? A couple simple things to where the industry is right now, of where they can be helped.
Always focus on the client. Even if the client's a pain in the butt.
Nice and simple.
If the client is a complete turd, they still are a person that came to you to solve a problem. If you accepted the job and you're going to accept the broker check at the end of the transaction, focus on them and make sure they get what they came there for. As long as you are focused on the client and what's right for them, the answers are always super easy throughout the process. If it means, you got to do something borrower paid and make half what you would normally make on a deal, there's any number of sacrifices you may need to make through the process. But as long as you keep the focus that it is about the borrower and the borrowers are what give us the business, it's just the best way. It will help you even just mental peace wise of knowing, hey, I'm here to help people. I like to say I help people in the aggregate. Like for me, I'm not a people person. Crazy for someone in sales, sure. But I'm not the extrovert. I don't go to parties and talk to 52 different people. I would rather sit down and talk to one person for 2 hours. But all of those people have the same needs and problems and worries. And if we don't help them, they're going somewhere else and they're not going to get my knowledge. They're not going to get my expertise. They're not going to get my service. So there's going to be someone in the group that you don't click with, that you don't like. But in the aggregate, we've got a couple hundred people. Maybe yours is 50. Maybe yours is 500. You have X number of people you're going to help in the year. Just remember, you're helping those people get somewhere. And if they don't come to you, they're going to get substandard service pricing, whatever it is somewhere else.
You're confident in what you do and you want the best for the consumer.
Absolutely.
That's awesome.
And you have to believe that you're the best fit.
Right. That's what I'm getting at.
I've done the time. I know that no one knows more about this stuff. I've partnered with the best wholesale lenders. Someone could have lower comp than me, but what are we talking, a quarter of a point?
Right. It's
not enough to be significant. So I know we have low costs, great pricing, great service, expertise, everyone on my team. I'm not saying they're perfect. I'm not saying they can't get better. We work every day on getting better. But I know the people we have on our team, the one thing that we will not tolerate, when we're looking saying, hey, do we work with this person or we just replace them? The first thing that comes out of Scott or my mouth is they care about the client. You can hear it when they talk to someone. They could be dead wrong, not know the answer and do the wrong thing. But if they're saying the right thing that it's about the client, we're going to be fine in the long run. It's when you stop caring about the client that you have problems.
You have an issue.
Yeah. So that's number one. Number two is what is one of the 7 habits is begin with the end in mind. Where am I going? What do I want? What do I want with my business? What do I want with my life? Where does my income need to be? What am I willing to give up to get that? If you start with that, so Building Champions starts with it. Carl at Freedom Club starts with that. What is it that you want and what are you willing to give up? And then design around that. Do I want to work 4 hours a day, 4 days a week? Okay, well, what do I expect for that? What do I have to do in those 4 hours to get it? Whatever your deal is, there's a way to design your life around it. But if you don't stop and say what that is, you get led around by other people's priorities. And that is a recipe for unhappiness.
Oh. Well, there you have it. That was perfect, man. Josh Lewis, BuyWise Mortgage. I appreciate it, man. Thank you.
Thanks for having us. It was fun.
All right.